passive investment versus active investment. Passive income or active income. What's the difference? Well, you could probably make more money on an active investment, but you're going to spend more time. You're going to be more involved. A passive investment, of course, earns you passive income, and it's going to be a little bit less of a return, but your work should be ideally a lot less. And that's the big difference when it comes to private money lending. Sure, you could go out and be your own real estate private money lender. You could make 12% annual interest. As a real estate private money lender, you would have your own first lien position, but then you would have to get all the documents, the promissory note, mortgage, and then you would have to coordinate with the title agent for closing on the purchase side and the refinance side, or when the borrower sells the property. So that's an active investment. A passive investment would be investing into my investment fund, Zip Capital, and then I do all the work, but you only get 9%. So if you invest $100,000 into Zip Capital, you would make 9% annual fixed returns, which is 3% less than what you could make if you do your own private money loan. But this is happening right now. I helped somebody else do a private money loan about 6 months ago, and he did the loan himself. So he had first position. He made 12%, and now it's time for the loan to be refinanced. And so now for the past 2 weeks, he's been going back and forth with the title agent. I've been helping him because I helped him start the loan, so I'm helping him close out the loan. But he's getting all 12% annual interest. But now the problem is he's going back and forth with the borrower and the title agent trying to coordinate the payoff. And the payoff now got delayed. It got pushed back because there was a discrepancy on the mortgage payoff at settlement. And so he's taking an active role. So he is actively managing that investment, or in this case, he's actively managing that loan. He's making the 12%, but is it really worth it for you to get that extra 2 or 3% and take an active role? So sure, I always tell people, absolutely, you can do your own real estate private money lending. I do it, I love it, but there's work that comes into it. It's not necessarily a totally hands-off passive investment. So if you want truly a passive investment, then I would recommend mutual funds if you want to invest into the stock market, or something like my debt fund. I invest in real estate debt. I lend to other real estate investors. I charge 12% so that I can pay my investors 8, 9, sometimes 10%, depending on how much you invest. So if you invest $100,000 into Zip Capital, you'll get that 9% fixed annual returns. Passive investment versus active investment. Passive income or active income. Two very different things. So try to figure out, what do you want? Where are you in your phase of life right now? And what would best suit you?